Ladies and gentlemen, good day and welcome to Apollo Pipes Limited's Q4 FY26 earnings conference call, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Biplab Debbarma, Emkay Global Financial Services Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I would like to welcome the management and thank them for this opportunity. We have with us today Mr. Samir Gupta, Chairman and Managing Director, Mr. Arun Agarwal, Joint Managing Director, Mr. Ajay Kumar Jain, Chief Financial Officer, and Mr. Anubhav Gupta, Group Chief Strategy Officer. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Good morning, everyone. This is Samir Gupta, CMD of Apollo Pipes. I have joined today with Mr. Arun Agarwal, JMD, Mr. A.K. Jain, CFO, and Mr. Anubhav Gupta, Group CSO. I would like to extend a warm welcome to all of you to our Q4 FY26 earnings call. The FY26 was a year full of rollercoaster rides. The PVC prices dropped by 15% in the first 8 months, then rallied 75% in next 4 months, and then again fell by 25% in 2 months to settle down at the current price of 84 rupees per kg. I believe my team maneuvered this tide well, wherein we crossed 1 lakh ton of annual sales volume. Apollo Pipes standalone sales volume increased by 7% and Kisan was flat on YOY basis. Needless to say that the demand remained impacted due to slowdown in both the private real estate sector and government infrastructure spendings throughout the year. Our consolidated EBITDA declined 30% for the full year due to inventory write-downs, aggressive pricing, and fixed expenses for our new business verticals. As we move forward, we have drawn a 5-year growth plan to achieve 35% revenue CAGR and hit rupees 5,000 crores revenue by FY31. We are ready with 3 plants which can give revenue of 1,000 crores each. We will set up a new plant of 1,000 crore capacity in South India and then 1,000 crore from allied products such as windows and bath fittings. And to support this vision, our group chairman, Mr. Sanjay Gupta, had joined board. I am sure that under his guidance and supervision, we will be able to achieve these targets. That concludes our opening remarks. Now we are glad to take questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1. First question is from the line of Aryaman Agarwal from Money Stories Asset Management. Please go ahead.
Congratulations on the good set of numbers this quarter. What I want to understand is how the demand scenario is shaping up overall now. This quarter looked more encouraging than the previous few years. And also, what sort of impact can we expect by the rise of these crude prices due to the conflict on PVC prices and our overall, I would say, demand and supply scenario?
Hi, Aryaman. Morning. So if you look at the demand scenario or the current trends, we feel they are pretty encouraging. Okay. So whatever happened with the settlement of PVC prices, and of course, last 2 years had been pretty slow in terms of the end demand from the construction sector or from the government infrastructure. So we believe that industry is sitting at very low base. Okay, so this gives us strong headroom to increase our sales at least. Okay, and we have been very aggressive in last 4-5 months, and you could see the results as well in terms of our volume and revenue in quarter 4 FY26. So we want to carry this momentum into quarter 1 of FY27, which normally is strong quarters within the financial year. So we are targeting 400 crore plus revenue for the quarter 1 FY27, and all our strategies in terms of pricing, marketing, branding, we want to achieve this number. We already got Mr. Amitabh Bachchan as our brand ambassador renewed. Okay, so that will also help us in pushing for our brand towards our dealer network, channel partners, plumbers, and consumer. So we are pretty bullish on FY27 now. And not only FY27, we want to carry this momentum over the next 4-5 years. Samirji mentioned that now Sanjay Gupta ji is the chairman. So under his supervision guidance, we will leverage the group network. We are already talking to large dealers within the group, and they have already come forward and started taking up PVC pipe dealerships, right? So the group synergies, we in last 4-5 years, whatever we felt that can be leveraged upon, now we are working very closely on those benefits. And like I said, next 4-5 years, we want to grow our business by 35% on CAGR basis. And there is a very good platform which has been established in terms of 1,100 crore worth of revenue in FY26. And the capacity which is already with us is 3,000 crore rupees. And then one plant in South India will come in next 2 years. And the other ancillary allied products, what we are building up in terms of portfolio, whether it is window profiles, whether it is water tank, whether it is bath fittings. So plus basis, we are very confident of delivering 35% revenue CAGR for the next 5 years.
And the near-term crude prices, this time let's trickle through the PVC prices, or not, does not look like that should make a difference?
It may impact, but it is very uncertain right now to predict anything about the PVC resin or any other polymer prices, because markets or the situations are very uncertain. We are not sure what exactly will happen tomorrow. So we cannot give any clear guidance regarding the pricing, but of course it will remain under pressure for the next few months. We are not very much bullish about the prices.
All right. Thank you.
Thank you.
Thank you. Next question is from the line of Varun Chilasaria from 360 ONE Capital. Please go ahead.
Yeah, hi, sir. So I just wanted to understand for this quarter, despite 13-14% increase in realization, our gross margin kind of deteriorated from both quarter-on-quarter and YOY. So could you just help us explain what is the reason for that?
So there are 3 main reasons, Varun. Number 1 being that, of course, in our last earnings call, we did mention that we want to be very aggressive in terms of pricing, okay, because we want to catch up on the momentum of volume growth first, and then once the base is set, then we'll look at the pricing. So despite the NSR going up, despite PVC prices going up, we continued with our aggressive pricing strategy because, that's what we had promised with our dealers, okay. So we continued with that. We didn't want to be very opportunistic that prices are going up. So we pull out of our aggressive strategy just to maintain the dealer confidence level, and this will benefit us in quarter one. So one is that. Second is because the window profile business is getting built up. So there were some costs associated to that, whether they were like sampling, etc. at various showrooms we had to give, right? So some of that which got accounted in the gross margin. And third, now that we want to have a base, okay, which can deliver 35% volume CAGR, right? So there were some finished good inventory which was lying in the books, right, in our plants basically, okay, which was like dead inventory, which was unsold inventory. So we thought that now that the volume we have to catch up, we had to clear some space, right? So there was some sell out of the finished good inventory, which was like unsold finished good inventory. So there was some write downs on that.
Okay. And sir, did we have any inventory gain this quarter because of the sharp increase in PVC price?
Very minuscule, because we were clearing the inventory, right? So inventory gains on the raw material inventory was nothing significant.
Okay. And sir, for this quarter, like you mentioned, around 400 crore turnover you're expecting. So how has been April that, we're guiding 40-45% growth for this quarter, despite, PVC coming down. So how has been the volume growth for April looking like so far?
We are on track.
Okay, because what we understand is there is fair bit of, destocking again because of, declining prices. So has that not impacted any way?
So the channel is already running at a very low price, low stocks. So that is not a big challenge right now because already channel is cautious regarding the prices. And again, there is not very sharp drop we are expecting in the PVC resin prices. 2 or 4% maximum here and there. And again, it will be again up to that next month only. The duty exemption, which is up to 30th of June, will be the last date. And again, 8.25% duty will be again hitting up the cost of imports. So we expect that will not long to last. So we are not very much bearish regarding that. It will go to again to a next level of around 60s in the coming in the near future.
Okay. And sir, how much are we currently, what is the procurement cost for us in terms of PVC price?
Reliance price as per Delhi landing, it is somewhere around 84-85 rupees, whereas the local trade market is around 79 rupees, you can say.
Okay, sir. Thank you, sir. I'll join the queue. Thank you.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and 1. Next question is from the line of Keshav Lahoti from HDFC Securities. Please proceed.
Hello. Hi. Thank you for the opportunity. So I want to get a sense, as you highlighted, you're getting aggressive for volume. So how you want to, balance the volume and profitability side? How should we see the margin going forward?
So if you look at Apollo Pipes, right, on standalone basis, our target is between 8,000 rupees per ton to 10,000 rupees per ton, depending on what kind of sentiments market has. If it is a lot of push, then margins could be 8,000 to 9,000 rupees per ton. If there is natural pull, then it could be 10,000 to 11,000 rupees a ton. So Apollo, we are targeting 10% margin, around 9,000 to 10,000 rupees per ton at EBITDA level. Kisan, in the year one, the margins were at 4,000-5,000 rupees per ton, but last year it was barely EBITDA positive. Reason being that there was a lot of pressure on the demand, there was no pull from the market, so there was a lot of push sales. Assuming that FY27 will be better than FY26, so for Kisan, the first target is to take it to 5,000-6,000 rupees per ton on sustainable basis, and then eventually as the further ramp up takes place, beyond 500-600 crore rupees of revenue from Kisan, then the margins will improve further towards 10,000 rupees per ton. So on Concall basis, you can assume that 6,000, 7,000, 8,000 rupees per ton, then the journey towards 10, 11, 12,000 rupees per ton in next 2-3 years.
Understood. Got it. So normally our understanding was, just to correct me, channel inventory was, pretty high on the March end because PVC prices were going up that point of time. However, due to correction, now the channel inventory is low. So is that assessment right? How has channel inventory moved? So that way, the April volume should have been a bit on the lower side. Can you give some sense on April volume?
See, definitely channel inventory got like heavy right towards end of March, and it did impact April to some extent, right? But like I said, 400 crore of revenue for quarter one, we have factored in like, whatever April went through, okay? And there was expectation that yes, after strong March, April will be light, but then from May, June, again, things will pick up. So we are already seeing pickup in inventory, in channel filling up, right? So yes, things are pretty much on track.
Okay. All right. So just can you give a sense, what sort of, maybe not on revenue, sort of volume growth you are targeting for this quarter? So what industry growth you are building and what is your target for this quarter? And how is the demand moving right now, agri and plumbing demand?
So if you look at like the revenue for the quarter four was around 350 crores and we are targeting 400 crores. So it's like 15% jump, somewhat, right, on quarter basis. And I think NSR for the full quarter of Q4 was 110 rupees per kg. So I don't think there'll be like much of hardly 2-4 rupees here and there. So you can expect that the volume growth is like double digit only.
Understood. Got it. So that is helpful. Thank you so much. Lastly, I also asked on the demand side, flavor on demand, how is it moving?
Demand is like April was good. Okay, it could have been better, but it was expected because of heavy March. May, June, it's a seasonal quarter for the industry. Okay, demand from agri is good, and projects which got spilled over, as in like the construction projects which got spilled over in quarter four. So contractors are now rushing towards closure of those projects. So demand is good so far.
Got it. Thank you so much.
Thank you. Next question is from the line of Anu Parak from Anand Rathi. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Can you give me some color regarding how the demand is shaping up in urban and rural market?
So see, so let's break the demand in two segments. One is plumbing construction, second is agri. And so rural is all agri. Okay, so that demand is good because of the main season for the water pipes. Okay, so that segment is doing fine. Now in terms of construction, plumbing, rural and urban, I would say that demand is good in both the regions. Yes, rural is outperforming urban in last 2-3 months. This is what we are witnessing.
Okay. Also, just wanted to understand how is the competitive intensity in the plastic pipe space, given that the site promoter of Ashirvad Pipes is planning to come up with a large pipe plant in FY27. So do you expect the competitive intensity likely to remain high over the medium term?
See, competition intensity has increased significantly in the last 3-4 years. Okay, and that's why out of the pressure, all the top players in the industry, they started reducing pricing. They got into price war, and everyone fighting for its share So that's continuing. Okay. At the same time, a lot of cleanup at the bottom level has also happened because the larger players, organized players are having a very aggressive pricing. So the margins in the industry go down. And then the players with higher cost in the unorganized segment with zero brand value, they suffer and then they shut down also. So a lot of capacity gets cleaned up as well. So I guess, and after 2-3 years of like flattish volume growth for the industry, at some point, industry will benefit from the low base also, right? If it's a 50,000-60,000 crore industry in size today, and it starts growing at 7-8%, so every year 4,000-5,000 crore worth of new market will be created. And yes, I mean, competition will come and go. Okay, we are clear on our strategy that how we have to ramp up our plants, which are 3 in number today. The main North India plant, then the West India plant, and the new one in Varanasi. We have to take these plants to 1,000 crore revenue in next 5 years. Then we want to put up a large plant in South India, which is going to give me another 1,000 crore rupees revenue. So within piping segment, with the SQ range, with the new products, the distribution network, the brand Apollo, support from the group dealer network, guidance from Mr. Sanjay Gupta, and then on top of it, Amitabh Bachchan as the brand ambassador, I think we are pretty, we are well on track to achieve these numbers, irrespective of competition will come and go.
Okay. And sir, what is the PVC resin price outlook for the next 2-3 months?
Prices, like I told before earlier, the prices should be right now on the lower side. It may go down by, you can say, 3 or 4%, not too much. Downward is there. Again, on the higher side, there is no too much scope also there. So again, on the higher side, 4 or 5% plus side we see. So we are not see too much of ups and downs in the PVC prices in the near future. It should remain stable in the given range of plus minus 5% only.
Okay. And so just last question, what is the status of channel inventory? Is it normal or below normal?
Right now, the channel inventory after March stocking, and then again the prices fell down, the channel has maximum destock themselves, and they are running on a very low inventory. With the increase on first, they have tried to a little bit of, you can say, increase the inventory at their end, but that is not on a very higher side. And again, the seasonal demand is there, so we don't see that channel is running on a very high inventory. It should be on a normal, or you can say below normal inventory only.
Okay, sir. Thank you so much. That's it from my side.
Thank you. Participants, to join the question queue, you may press star and 1. Next question is from the line of Abhishek Sanghi from Equinova Investment Managers. Please proceed.
Yeah, thank you for the opportunity. I wanted to understand management's long-term strategy for Kisan Moldings. So Apollo Pipes has steadily increased its stake in the last few quarters. So should investors expect Kisan to continue as a separately listed entity, or could there be a merger or consolidation with Apollo Pipes to be considered in the near future? And what are the broader strategic plans for Kisan over the next 3 to 5 years?
Okay, so I'll address second question first. Kisan molding plant right now is capable of generating 400-500 crore of revenue. I mean, we closed at around 250 crore last year. Okay, so first strategy is to take this to like 500 crore rupees. For that, there is some like 30-40 crore of capex, which we have already incurred, right? Then we want to build capacity for 1,000 crore rupees within this plant, and for that another 50-60 crore will be spent for brownfield expansion within the premises. So we want to take Kisan plant to 1,000 crore revenue with minimum 10 to 12% kind of EBITDA margin, because that's the product SQ range they have, that's the brand value it carries within the Western Indian markets. During this time, I mean, we will ultimately merge Kisan Moldings in Apollo Pipes Limited. We are already working on like how to go about it. Maybe in next few investor calls, you will hear from us like about the timelines about the merger.
Okay. Thank you.
Thank you. Next question is from the line of Ameya Deosthali from Value Equity. Please go ahead.
Hi, thanks for the opportunity. So I just wanted to know, what do we think about the market structure going forward? I think because of a lot of sector weakness, we should be seeing or targeting for some market share gains, right, in the next 1 or 2 years. I wanted to know what you think about this.
Yes. So see, I mean, if you look at my revenue base of 1,100 crore rupees on market size of say 55,000 today, we are at around 2.5% market share, right? And given the ramp up which is going to happen from the existing plants plus our new South India plant and then Varanasi plant has to show results, right, which it will. So we are looking at like 3.5% market share, okay, in next 3-4 years, assuming industry will grow at 7-8%. So that's how we're going to achieve our 35% revenue CAGR, what we are guiding today. And market share will, come at the cost of the smaller, weaker, unorganized players. Okay, still there is a long tail which keeps on getting disrupted because of whatever is happening within the sector, right, in terms of price volatility, etc. And on top of it, the formalization of sector keeps on happening, and then consumer awareness towards brands, formalized channels. So all that will keep on helping us to take market share from smaller players.
Okay, thank you.
Thank you. Participant, if you wish to ask a question, you may press star and 1. Next question is from the line of Shashank Soni from Drishya Capital. Please proceed.
Yeah, hi. Thank you for taking my question. I just had like a 2-part question. One is just on the product split within pipes. If you could just let us know broadly what's the current and what do you intend it to be, right? There's also CPVC, I'm assuming, ramping up.
So if you look at our sales split, right, let's start from the top. So one is the plumbing construction, second is agriculture and government infra. So plumbing construction is around 60-65%, okay, of the total pie, and then the rest 35% is agri and government infra. Within the construction plumbing, CPVC is growing at like 10-12%. Water tank is growing at 20-30%. Window profile business is ramping up. Like Q4 contribution was small, but this year we expect minimum like 4-5% contribution in the total revenue, okay, for the construction plumbing segment. And then yes, the demand uptick in the base products, which are like UPVC pipes and fittings, that also will drive volume growth for FY27.
Got it. And given your recent tie-up with Lubrizol, are you seeing early signs of the benefit that you're giving? Because what we also see from your competitors, right, they're kind of doing the compounding in-house and passing on that benefit to you, to the customers, right? So how do you see that play out in the actual work?
So like I said, CPVC grew for us by 10% in FY26, and with Lubrizol tie-up and support, okay, we are expecting more than 20% growth in FY27 within CPVC segment.
Got it. That's very helpful. Thank you. And maybe just one last bookkeeping question. Your other expenses kind of increased a bit more, right, in Q4. Was it related to maybe like, as you mentioned earlier in the call, right, some starting of expenses for the window, or was there like a particular reason for the increase in other expenses? I'm talking about standalone.
Of course, yes. Mainly that only.
Understood. Okay. Thank you so much, and best of luck.
Thank you. Next question is from the line of Roshan Nair from Antique Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is,
Roshan, your voice is very low.
is it audible now?
Yes, please proceed.
Yeah. So, in Kisan Molding, the last quarter, the commentary was that the performance should, we should start seeing improvement in Q4. But yet if you see, the performance is more or less similar to last 2-3 quarters. So maybe you can help to understand what has gone wrong in this quarter for Kisan Molding. That's the first question.
Can you... Okay, so as I could understand, you're asking about Kisan Molding's quarterly performance.
Correct.
So see, I mean, quarter four revenue for Kisan was 80 crore rupees, which was like 60 crore in quarter three. Okay, so there is a good jump on quarter basis. In terms of volume also from 5,000 ton, it did like 7,000 ton on quarter basis. So yes, I mean, there is, in terms of volume ramp up and revenues, there was a good jump. In margin, yes, there was some disappointment. Reason being, the Jan and Feb months were not too good in terms of demand. Demand only recovered towards end of February and March month. So there was a lot of push sales and aggressive sales in the first 2 months, which led to margin deterioration. But that was the strategy what we adopted, and now that the plant ramp up is happening, right, the operating leverage benefit will start coming in, and from quarter one you will start seeing improvement in the margins as well.
Okay, that's helpful. And the next question is, as you have indicated that,
Mr. Roshan, your audio is not very clear, sir.
Is it better now?
Yes.
Yeah. So the next question is, as you had indicated that the import duty is likely to come back by June. So are you witnessing any higher imports from China, or it is even expected to be there in May? And this plus minus 4-5% PVC price volatility that factors in this higher imports that can come from China in the month of May.
Yeah, Mr. Roshan, yeah, we expect that may come, the higher imports may come because on account of seeing duty being, you can say that no duty being removed, and again the duty will be there from 1st of July. So there may be high level of imports in the you can say next 15 or 20 days, maximum 30 days, you can say that. But again, the channel will be cautious regarding that, because once again, with a higher level of imports, the traders always faces losses because of those things, higher inventories. So I don't think that there will be too much of stocks in the you can say channel for the resin inventories with the traders. But of course, they will definitely take a bet on that thing, and will try to make higher imports and will try to make money on account of that. But seeing monsoon season post for July or August, you can say that the demand will be under pressure in that quarter two. So I don't think that it will be at a very high level. Of course, it will be at there, but not at very high level. So it can be a yes or no both ways, but we are not very much bullish about that thing.
Okay, thanks a lot. And the last question from my side, what is the CapEx guidance for FY27?
So CapEx, see, I mean, we spent 150 crore rupees for the FY26. FY27, our commitments are to ensure that the Kisan plant has the capacity to throw 1,000 crore kind of revenue, and plus some brownfield expansions in the existing plants which are going on. So for FY27, the total capex requirement would be near about 100 crore rupees.
Okay. That's all from my side. Thank you. Thanks.
Thank you. Next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Good afternoon, team, and thanks a lot for the opportunity. Just a couple of questions from my end. You said from Q1 onwards, you shall see margin improvement. But while what we understand is there have been aggressive pricing, which even you have opted for, even the competitive intensity continues to remain high. With share of agri being higher in Q1, how do you plan to achieve higher margins here?
So Sneha, see, in terms of, if you look at the EBITDA, right, look at Apollo standalone and look at Kisan. So Apollo standalone has been in the range of 8,000 to 10,000 rupees per ton on regular basis. Given that, volume will increase within standalone Apollo, there will be a lot of operating leverage benefits we will see. So that's the, I would say, positive tone which we highlighted, that there will be gradual improvement in the spreads for Apollo standalone from 8 to 8,500, 9,000 rupees per ton. So that much improvement you will keep on seeing. Kisan right now is at barely breaking even. The reason being the plants are being highly underutilized. So a lot of work is happening, how to increase sales, etc. And initially, of course, sales will come at lower NSRs. Kisan will take 1-2 quarters to show significant improvement. But yes, we'll pull it out of -1, -2, which it is being throwing for last 4 quarters.
Understood. And where is this confidence on the volume growth coming in? Is it any improvement on the sectoral demand that you are seeing, and you have also invested into OPVC? Have you started seeing any infra spends coming in? Or is it just purely the plumbing and the agri side of it where you're seeing things pick up now?
I think that's the core business which shows positive signs, okay, for such growth guidance. Government infra still remains low, right? Although a lot of promises have come towards release of payment, etc., and kickstart that capex, but we have not seen anything significant coming on ground as of now. Our positive sense is coming from the core existing products, our dealer network, addition of new dealers from the group, then the pricing, aggressive pricing, what we adopted 4-5 months ago, that has started to play. So all the factors at the micro level make us bullish on our volume numbers.
Sure. Can you just give the distributor addition number, probably FY25 versus FY26? Where do we stand at?
So see, net addition will be 4-5%, because now that we are looking for a very strong set of distributors who can run along with us, right, to match our growth commitments of 35% on annual basis. So there will be a lot of cleanup which will take place, and we'll make some relevant large dealers, like how we operate in Apollo Steel Pipes. So that's the kind of strategy we're going to adopt here, and we're going to filter down smaller dealers, and we'll attach them to the larger ones. Plus, yes, there'll be some addition from the group. That number will be more relevant to give after say maybe 2 quarters.
Noted. And lastly, on the working capital days, we've seen some amount of increase in this particular quarter. Could you help us understand when can they normalize, and what was the reason for increase this quarter?
So see, FY25 was a very solid year with 35 days of working capital cycle. This year, FY26, we closed at 46 days, 45 days. So there is 10 days of increase in the net working capital cycle, which has mainly come from the inventory days. Inventory was 70 in FY25 and 80 days in FY26. So as plants are ramping up, right, and some clarity on the PVC price settlement, this inventory days shall come down by like 5 to 10 days during this financial year. And our channel financing program is also undergoing pretty smoothly. So I guess FY27 we should be like closing below 35 days. And although our internal target is 30 days, right, as at March 27, but yes, it'll be like touching the FY25 number minimum.
Got that. Thanks a lot, team, and all the very best.
Thank you. Next follow-up question is from the line of Varun Julasaria from 360 ONE Capital. Please go ahead.
Yeah. Hi, sir. Sir, just to follow up on the south plant, when do we plan, what is the progress here? Like, because we have the warrant expiring this year, so, like, what is the plan? Because in the CapEx, you mentioned there's only 100 crore for this year. So, are we factoring anything for the south plant?
So south, see, I mean, right now we have a plant within Bangalore region, okay, Tumkur to be precise. I mean, what we believe is that whenever we go and set up the base, it will be near that area only, Malur, Tumkur, Bangalore belt. I think the work for that will start after 1 year in terms of land acquisition, etc. First, I mean, this year, from the target is to ramp up Varanasi, which is now fully operational. Okay. So once we have like confidence, conviction that yes, Varanasi is on track, then immediately we'll start working on South India plant. I mean, as per our experience and expertise, what we have built in the project execution, we believe that within 18 months from like the day we finalize the land, and 18 months from that date, we can have the plant go live. So you can expect that South India plant will come somewhere in like, you know, FY28 end, towards FY28 end.
Sir, for the window and the door profile business, sir, how is the realization for this segment and, you know, which are the areas that we are targeting initially? Hello?
See, I mean, we sell window profiles on per length basis. Okay, it doesn't get sold on a per kg basis.
But this volume gets added, right? I mean, for our overall volume, for the segment which we mentioned, right?
160 plus. Yeah, that's right. It is like contributing like around 1.5% to the total sales.
Okay. And which are the geographies where we have penetrated initially?
Right now we are at North India and South India.
North and South, yeah.
Okay, sir. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Hello everyone. I thank you all for joining us today for this Concall. We appreciate your continued support and interest in our company. We look forward to updating you on our progress and future calls. If you have any further questions, please feel free to reach to us. Thank you and have a great day.
Thank you very much, sir. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.